Hello guys, in this video I'm going to tell you what is a mitigation block. In this scenario, this is going to be a bullish gation block. Now mark this bullish candle as a mitigation block. Okay, now why it is mitigation and what does it even mean? Now this line you already know what is this line you guys know what is this. Something happened here which caused the market to move and turn into bullish. Now this is human behavior of buyers and sellers. We start from the beginning of the day so you are clear what we are looking for. It was a high, low. We mark this for you so you better know what I'm talking about. High, low, high, low, high, low. And then price is moving like this and whatever happened. Now, in the bearish breaker block, when a low is made and a high, then the condition was this low needs to be taken. But in the mitigation, it is important that this low should not be taken and the price moved away from here. And in the mitigation one, when it made a high and then low, it's a higher low, never took the liquidity of this low. You are going to mark the last up close candle, and that last up close candle is going to be the candle in this leg. Up close last candle is this bullish candle. You'll take the high and the low of this candle just like this. Now, when the price closes above this high, which is this, or you can even say this one, you will wait and wait and wait and wait and retest. Okay. Now, in this example, ICT never explained that there should be a fair value gap in front of the mitigation block or something like that because it's only one candle. Mitigation does not mean a series of candles. No, mitigation will only be the last up close, or in the bearish side of mitigation, it will be the last down close candle. So mitigation is only one candle. Let me repeat this. Now this is again a picture perfect example for you. What we are doing, which is this zone, it's a discount zone. This is the midnight open. We need to buy here only. Now, price was coming down, made a low, then high, then a higher low, and then this high was taken out. This caused, when this candle closed here, this caused MSS, market structure shift. Now the market has turned bullish, but where to enter it? Now in this example, the breaker block is not there. Your friend breaker block is not there. How would you enter a trade? You will simply use this mitigation strategy. Then you will take a buy. Stop loss is right here below this. If you have entered here, your target, if you are not seeing any liquidity, you're seeing a slide like of price action, obviously this is the target. Why this is happening, you guys already know. So let me do a quick recap of what mitigation is. When on a liquidity level, a low is made, and then a high, and then a higher low is made, and the price closed above this high, you will see the last up close candle. It can be of any shape. If it's a big body candle, perfect. It should be a bullish candle. And then you will mark the whole block like this, the high and low of that. When the price comes back, you are in, targeting the midnight. In this example, of course, but in other examples, if it's happening wherever, after taking the liquidity, you will target the recent liquidity. Thank you so much.